Good evening, everyone. Today is March the 28th, and this is the Metastock map. I want to talk to you a little bit about the wide-angle view of what's going on with the charts. We are sitting in a very sideways formation. These are daily bars, and so they are showing us a lot about what the chart is telling us in general, and that is, hey, listen, we are caught in a little bit of a sideways zone. This is the current contract. It is the June contract. And what we're doing is coming into support, bouncing, going into resistance, and then moving back and forth. Today on Twitter, I called it a game of Pong. Someone said, wow, that's certainly an age test because a lot of us don't know what Pong is. But that's exactly what we are looking at. So the question is, one, why? And what do we need to look for? Well, the why is pretty convoluted. And so what we've got is a cross current of the Fed trying to put off the impending recession that they believe that they see on the forefront because of the yield curve inverting. That means the front month is getting as much premium or more than the forward months. And so that is particularly important. So they're trying to cut that off at the pass. ECB is trying to cut it off at the pass. Everybody sees what's happening in the world. And so they're really trying to work to make this as low key impact as possible because nobody wants another 2006, 2007, 2009 event or anything like that. So the Chinese are coming and saying, hey, listen, let's work out these trade deals, and just a ton of things happening in terms of people pulling the lever. Fact of the matter is, business cycles occur, and you have peaks and you have troughs. And some of those troughs can be deep, some of them can be shallow. What we are looking at, essentially, in my mind, I suspect that for the next 2 quarters, we're going to be looking at sideways chop. Now, there's a reason that I see that technically, but there are also some levers that we can see that are actually affecting that fundamentally. And so what do we do as traders? You can see volume tapering off as it sits here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 of the last 14 days, we're almost completely in this pocket of motion, and that tells us we have price compression, reversion to the mean. This is an adaptive or variable moving average. It's flat, and what it's telling us is I've got sideways action. Now, traders don't really like sideways action, so they either have sideways, break down, and then break back out, sideways, break up, and then break back down. Whatever the case is, my supposition across the board is when you see the sell signals coming across with the Metastock map using the target-rich trades, the bounces into heavy resistance, known resistance above, are going to give you selling zones, and deep dips into support are going to give you buying zones. So here we had a sell position, actually was triggered here for me. I love resistant zones to come up, flattening action to take hold, a double topping formation with technical divergence. Notice this is just about the same level as it is over here, but price is much larger. That's technical divergence. When that happens, I get to have a short. Guess what? My short signal triggers, and I'm able to do that. It simply confirms my edge. So I use my diamonds to tell me, hey, get ready. If you don't head higher and you see technical drift, or you head higher and there's significant negative technical drift, your chart is going to fade into a support zone. Overall, we're very bullish, and we're likely to stay in these bullish formations. We could get rocked a time or two with something dramatic occurring, but to be sure, there are going to be buyers floating around in these bottom edges. Let's take a look at the NQ. The NQ has not triggered a sell zone yet on the daily chart, but it has given us a resistance edge that says, hey, listen, just so long as I fail the top of this line, right around here, I am going to have selling pressure, and the selling pressure is going to come into what? Essentially, the last place I had significant support. And that's going to be somewhere around here. We're above it, as you can see. So that is a very interesting place. What we have to see is, are we trying to form a new support zone, or is the chart eventually going to drift down into this level? That's what we're going to have to look at in general with this chart. All right, so overall, old resistance likely to bring us new support, and old resistance here likely to drift us back into support. We've got the same kind of behavior, a little bit more action, but still technically divergent. That's just the name of the game right now. How we would want to play that, I'll show you in just a moment. But let's take a look at the YM. This one looks very different to the others. Take a look at how technically divergent this is. Now, it got a jolt from Boeing, but Boeing is trying to hang on. It's got a second sell zone. Here was the first sell zone, came down into deep support. There's my diamond pattern that tells me, hey, you better take profit. And notice, very nicely, it came into the last congestion zone, didn't break this area above, but it did come in just below it. And that gives us a reason and a region with this negative divergence to go short. Very nice, clean signals. You just need to know how to read them and realize nothing is trending here, folks. You're going to go support to resistance, resistance to support, and it's probably going to have 2 quarters of motion attached. Any deep dips you see are very likely to rebound, and any big spikes you see are very likely to sell off. That's just what's happening. Now, the RTY, don't normally look at that, but this one, a little important, simply because all of a sudden it started holding a measure of support. Now, it's been pretty sold off, I will say that. Look at how thin the volume is here to the left. That really is because this chart doesn't really get traded. Pardon me. This chart really doesn't get traded with any volume until the real month comes through, and this is what we are looking at. Sell zone occurred here. Here's my thought. There is a number right around 1560. This is 1545, and you can see that that is old support looking like resistance, but really all the way up here, 1560 to 1580, still gives us a sell zone. And take a look at this. This is negative pressure. It is under the zero line. And if it's under the zero line, that's a problem. Now, it's very close to the zero line, even though it's under the zero line. So what we are going to have again is a range. What normally happens in a range? Well, if you try to get involved in the middle of the range, you're going to have wide risk. So participate on the edges. You either want to look for a failed retest if you believe it's going down, or a positive retest if you believe it's going up. I think it's going to do neither. And so I'm going to look for these edges to place reversal trades. The next thing we want to take a look at is what's going on with oil. Oil has sort of stagnated, and it did give us a sell zone. Take a look. Right here, old support, new resistance. Here's the rub. We can look at this and say, I see that that is giving me resistance, but that's a fairly bullish chart. And whenever a trigger occurs near the moving average, and that trigger is in the reverse direction of that moving average, meaning this overall moving average is up, this is down, that means the only thing I'm going to do is come into frontline support, and that frontline support is usually going to be the moving average. And so you really have to be very careful about taking these triggers when you're, one, close to the moving average, or two, looking at a flat moving average, or three, looking at a signal that tells you to do the reverse of the trend. So what would you do here? You wait for the resistance area. That's about 60. Anytime we've come into 60-30 over the last 1, 2, 3, 4 days, we've had ourselves a pullback. Buyers are very keen on holding this level, so you go resistance to support and you get out of the trade. You're not here to capture and bag an elephant. You're here to take small pieces of cheese and work in a manner that keeps your risk low and your opportunities for profit high. Okay? Now, the things that have been moving the dollar and things that have been moving oil and the dollars, really, gold here is being moved by the dollar, of course, and the dollar really spiked today. Now, that could have spiked because of something happening in the Eurozone. I actually have not read the news yet for this particular motion, but in my mind, I was already looking for this chart to go sideways, and the reason is this. All right, here's the support, old support, new support, it's a buy zone. So you just look for it to hold. After the diamond shows up, you watch it breach the level, and you're all set because it's big support. You might say, Anne-Marie, you just said that if the moving average is down and you've got a signal that pushes up, you ought to be careful. Yes, absolutely. It tells you you're going from support to resistance. Here's how this runs. When you go into major support from the left that you can see, and you enter into the range, when you bounce, it is very likely to come back to the bounce point. And that's exactly what it did. It bounced out. This trigger says put your limit order for the next day at the open, and that is going to take you where you need to be in general. Now, this was pretty messy, but it turned into a nice run that went to the top of resistance. How do you know that's a number you want to look for? You're going to see it as old sell zones, old buy zones, or old resistance zones. That's exactly what you're going to see. And that's exactly what we had. Today, this stopped out, but see, we've been given flashing signals that say, hey, if you look at this number and you see a red diamond, watch for the pullback. As long as it doesn't break your old support, you're fine. When it comes into this higher high, you've got to look at the edges of the old levels of warning that say, if I lose this 1320, I'm done, right? But if you pick it up at 1294, 1295, you're in great shape moving to that top edge. Here, this is what I did today. I know old support is here. I know old support is here. So I bought here in this formation, but it did not get past 1296. And so it was time to get out. But that was still 3 points off the edge. And I knew that where old buyers were, new buyers were going to come in and at least give it a go. All right, that's what we're looking at for the Metastock map. We've got sell zones, sell zones, sell zones, sell zones, sell zones, just about everywhere in the chart. And so we've got to be extremely careful and realize that what these sell zones are doing is telling us that support tests are in line, not that we're breaking down, because our motion is still bullish. It's just telling us it's coming into support. All right? Good luck trading.